Hello friends, a very warm welcome to my channel. In this video, we are going to talk about Yatharth Hospital. It's a multi-speciality hospital based in Noida. I've got a lot of requests to make video on this company for a very long time. Before we begin, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer. This is not a stock recommendation. We are discussing only for educational purposes. This stock is also not chosen by me. It is chosen by the audience in the Telegram channel. I am a SEBI Registered Research Analyst. I or my clients may have positions in the stock and I may change my view based on any development in the company or the quarterly results. This is a crisp video and not a full-fledged detailed one. So I'll cover only the important points in this video. This will be the flow of our discussion. We'll talk about the business model in brief. We'll look at the stock performance in a few years. We'll talk about the financial parameters. We'll discuss why the stock has given a sharp correction from the top. We'll discuss the outlook of the management going forward. We'll see the valuations. We'll understand the risks of investing in this business and then form an overall. Yatharth Hospital is a chain of hospitals based in Noida. It's a multi-speciality hospital. Now they are spreading to the nearby states like UP, Madhya Pradesh and Haryana. This was started in 2008 in Delhi. Dr. Ajay Tyagi and Dr. Kapil Kumar are the founders of this company. They have 7 hospitals right now and a bed capacity of nearly 2,300 beds. It's a multi-speciality hospital and gets its revenue from different therapeutic areas. Internal medicine, nephrology, neurosciences are the main contributors or the top contributors to their revenue. If you look at the healthcare industry in general, it is also growing in double digits. Up to FY28, we can expect this industry to grow by a CAGR of 10 to 12%. So this sector has good tailwinds, and that's why all the major hospital chains are showing good growth in the range of 15 to 20%. When it comes to the penetration of the number of hospitals versus the population, India is one of the lowest in the world, and we are at 15 compared to 33, which is the world average. So as this penetration increases, huge amount of business will move from the unorganized hospital chains to the organized hospital chains. The recently listed company and the IPO price was somewhere around 300. It was not a great listing as the valuations were rich when this IPO had come, but later as the results were consistent, the stock gave an upward movement and made a high of around 700, which is more than 2x the IPO price. But then onwards, it witnessed a sharp correction due to multiple reasons, which we'll discuss in the coming slides. And right now it trades at somewhere around 450 rupees. In terms of financial parameters, in FY21 they did a revenue of about 229 crores, which increased to almost 826 crores in the trailing 12 months. So there is a steady increase in the revenue in the last 5 years. In terms of profits also, EBITDA has also increased from 68 crores in FY21 to 210 crores in the trailing 12 months. So there is a steady increase in the profits as well. But when you look at the margins have reduced a bit. They were doing an EBITDA of 30% in FY21 and now they are doing it somewhere around 25%. So one reason for softness in the margins is their expansion. So as the new hospitals open, their capacities are not used to the fullest. And in the initial few months or a year or two, the profitability in the new hospitals is less. That impacts the overall margin of the company. When it comes to the occupancy rate, it is somewhere around 61% for this hospital, which is in comparison to the other top tier hospital chains like Apollo is slightly less. But if you see the trend within this hospital, we have seen an increase in the occupancy rate in the last few years. In FY21, the occupancy rate was about 42%, which gradually increased to 61% now in the last 9. The average revenue per occupied bed, this is a metric which we track in the hospitals industry. It was about 21,287 in FY21, which was quite low, and now it has improved to almost 30,000 rupees. Again, this is higher in the other hospital chains which are peers of this company, but this company is also working towards increasing this by introducing treatments like oncology where the billing rates are higher. Average length of stay in this hospital is 4.38, which is pretty decent. This is the number of days on average a patient stays when it gets admitted into this hospital. They have done a QIP fundraise of 625 crore recently in FY24. This they'll be using for some inorganic acquisitions. And IPO was 490 crore fresh issue and offer for sale was about 196 crores. Even before the IPO, the company had raised 120 crores in the pre-IPO round. One thing I've noticed that the receivables in this company are increasing every year. They have, at the end of H1 FY25, they have receivables of about 259 crore. So this is something which you should monitor going forward. Whenever the company does business with corporates which have long-term arrangements, government bodies, or they have a lot of insurance claims which are pending, the receivables increase. Otherwise, in the retail segment, it's a cash business. As the company is regularly doing expansion, acquiring hospitals, doing organic as well as inorganic expansion, the free cash flows are not good in this company, and that's why they are raising funds via equity dilution. What led to the fall in the stock price from 700 to about 400, 450 right now? There was an income tax raid conducted in the various locations of this hospital, which has spoiled the sentiment in the market for this company. The case is still going on, and until they get complete clarity, the stock may have this overhang. But the management has clarified in the recent earnings call that within this calendar year, before the end of this calendar year, the income tax matters will end, and whatever attachment they have towards some properties, that will be released very soon. Margin compression is also one reason because of which the profits were impacted, and that's why the stock price has corrected a bit, and the overall market sentiment has also impacted this company. Valuations at the top of 700 kind of a price were also expensive, so which have got normalized now. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description button so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market. I also share a lot of portfolio allocation strategies which will increase your portfolio returns. Then what is the growth outlook of the company going forward? They are prepared for doing organic as well as inorganic growth. So they will be increasing the bed capacities in their existing hospitals, as well as they will be acquiring more hospitals in the North Indian region. Plan to increase their bed capacity from 2,300 beds presently to 2,800 to 3,000 beds by FY28. Recently, they've acquired a 175-bed hospital in Faridabad, and they've expanded this to 200 beds. Also acquired a super specialty hospital in Delhi, which was earlier called MD Hospital. They've also done an arrangement to acquire 60% stake in a 400-bed hospital in Faridabad. So they plan to adopt a cluster approach. They've entered Faridabad, and now they have taken a second hospital in Faridabad itself, as their brand becomes well known in that. Earlier, the management aimed to do about 1,000 crore revenue in FY25, which looks a bit difficult in this year, but next year definitely they'll be able to meet this target. EBITDA margins, they aim to maintain at somewhere around 25-26%, which is slightly lower than their history, but it is a fairly good margin overall. They want to focus on improving their occupancy rates as well as their efficiencies to improve this EBITDA margin. Right now, their average revenue per occupied bed is somewhere around 30,000. They plan to focus on this and improve this figure so that the overall margins improve for this company. And to do this, they are introducing advanced treatments of oncology, PET scans, and bone marrow transplants to fulfill this vision. Geographically also, right now, they want to continue focusing on North India, and in the future, they may look at other locations as well. So this is how they plan to increase the number of beds up to FY28 from 2,300 right now. When we talk about the valuations part, which is the most interesting part for any stock analysis, from the time of listing, the median average price earning multiple this company had got was about 44 in the last couple of years. Right now, it is trading at around 33 times. This is due to several reasons which we just discussed. So compared to the peers in this industry, the valuation is not very expensive. There are a few things which we have to closely monitor in this company going forward, like their execution, their working capital management. Only then the company will justify getting higher valuations. Now, what are the risks of investing in this business? This is geographically concentrated in the Delhi and nearby regions. That is one risk. The average revenue per occupied bed is lower compared to the peers. The occupancy rate is lower compared to the peers. So overall efficiencies are lower compared to the other better peers in this industry. They have been acquiring hospitals, extending bed capacities. So increasing capacities is one thing, but filling them up is another. So that is an execution risk in this business. They are borrowing money, they are raising equity. So leveraging to expand is another risk. This is a highly regulated industry. So if there is any adverse regulation which applies to this industry, that could be an external risk. There is a lot of competition from existing and new hospital chains which are coming up locally, as well as the multinational chains. The income tax case remains still open. Any adverse judgment against the company would be a risk. And also the working capital and the receivables monitoring is very important in this company. So now that you've understood the business model of the company, the valuations, the growth aspects, the risks, what is our overall view on the stock? If you're already holding this company for a long time, the near-term future looks bright for the company. You should continue to hold and keep monitoring the risks which we discussed. But if you're looking at a fresh entry, although the valuations are slightly cheaper compared to the peers in the industry, those are lower because of these challenges involved in investing in this business. So it is advisable that you can accumulate in a staggered way. As and when the execution improves, as and when these metrics improve compared to the peers, you can increase your position size. And during this journey, if the company fails to perform, then that would be a red flag for you to exit. So that's about Yatharth Hospital. I've tried to cover all the important points in this crisp video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention their names in the comment section. Thank you for watching.